Indeed, let's get to Michael's top picks. First idea, CIBC. Why is this one of your favorite lenders, Michael?
Well, as I was saying earlier, we've seen the bank stocks retreat quite significantly over the last while. And I think right now CIBC particularly is a good bank to choose. Within the top six, it probably has the second highest dividend yield at the moment. We were talking about Bank of Nova Scotia earlier and, its exposure to South American commodities. CIBC is a little less exposed there. With their recent acquisition of Private Bancorp in the U.S., they have sort of judiciously moved into the U.S. more and more, and now about 20% of their earnings comes from that area. Management talks about that perhaps getting up as high as 25% in the near to medium term. I think that they've done very well in that regard. So, with 5.3 dividend yield, I think that's approximately where it is. I just think it represents outstanding value at this point in time. So if I was buying a bank today, I would be buying CIBC.
Right. Let me just check on the yield, about 5.3% right now. Canadian Natural Resources would be among your top energy picks. It's your next idea.
Yeah, CNQ is the largest senior producer in Canada. They have a very diverse asset base and industry-leading cost structure. So, we talk about oil, pressure on prices, but CNQ can continue to pay their sustaining capital and maintain their dividends all the way down to prices in the mid-30s, and we're a very far cry from that. So I think that given our generally favorable outlook for the energy industry, I think that we really do like CNQ, and currently they do have a yield over 4%. There could be dividend increases in the future, I think, going forward. They've talked about increasing their share buybacks to some extent. I prefer to see dividends, but, share buybacks do help the price as well. So I think that CNQ would be certainly one of our primary holdings within the energy sector, and will continue to be so for some period of time.
And your final idea here, CVS Health, the U.S. drugstore and healthcare giant.
Yeah, a few years ago we recommended this company. It had just, purchased Aetna Insurance, and it was branching out into the insurance field. So, they've gone from being a pharmacy chain to this, and just recently they've announced an agreement to buy a company by the name of Signify Health, which does home health care. So one theme that we do see in the healthcare industry is the tendency for people wanting to have provisions for home care and that sort of thing. This opens the door for them for another leg in their chair to grow further. So they've had great growth, very, very smart acquirers. It is one of the largest healthcare companies in the United States. And I think that certainly post-pandemic, there is going to continue to be a focus on healthcare and for some period of time. So we have come back to wanting to recommend CVS once again.